Welcome back to Market Fetch. Today's big question, Ether versus Bitcoin in corporate treasuries. Which strategy is winning in 2025? Are companies and even nations preferring the security of Bitcoin as a digital gold or the yield and flexibility of Ether? By the end of this video, you'll understand the strengths, trade-offs, and which side is gaining momentum right now. Let's dig in. In the traditional world, corporate and sovereign treasuries rely on cash, government bonds, or gold to preserve value, maintain liquidity, and manage risk. But these instruments come with drawbacks. Cash loses purchasing power to inflation, bonds carry interest rate risk, and foreign exchange shocks can erode value. That's where crypto enters. Bitcoin and Ether offer a new reserve asset model. They can move across borders instantly, plug into digital rails, and act as a hedge against inflation. Institutions are starting to treat them not as speculative bets, but as treasury tools. Bitcoin has long been seen as the safe choice, the pioneer crypto, scarce, globally recognized. Many see BTC as a digital equivalent of gold. As a treasury asset, Bitcoin's advantages include strong liquidity, active markets worldwide fixed supply cap, scarcity built in broad institutional trust and awareness. But it also has limitations. It's not a yield-generating asset on its own, and its price volatility can stress balance sheets. To make returns, treasuries need to pair BTC with external lending or derivatives strategies. Examples: some companies hold large BTC reserves. As of September 2025, many institutions together hold over 1 million BTC in their treasuries. Ether offers a different story. After Ethereum's transition to proof of stake in 2022, the merge, ETH became a productive asset. You can stake it and earn returns, typically in the 3 to 5% range. That means treasuries holding ETH aren't just passive holders, they can earn yield. Plus, Ethereum's broader ecosystem adds utility, decentralized finance, DeFi, tokenized real-world assets, liquidity protocols, all of which give ETH reserves more flexibility. Despite regulatory and technical risks, ETH is gaining ground. Some firms and DAOs already hold ETH or issue ETH-based investment products. Let's look at the 2025 numbers. As of September 10th, BTC still leads in total treasury holdings, over 1 million BTC across companies and institutions. On the ETH side, about 73 entities hold over 4.91 million ETH, with top holders like Bitmine Immersion Tech, BMNR, owning over 2 million ETH. The key difference, Bitcoin holdings tend to sit idle as a long-term store, while a significant portion of ETH holdings are staked to earn yield. That yield gap is a major driver in ETH's attractiveness. To balance strengths, some institutions adopt a dual treasury strategy, holding both BTC and ETH. You get Bitcoin's recognized stability with Ether's yield and programmability, Cointelegraph. For example, the US Strategic Crypto Reserve holds BTC and separately a smaller ETH allocation in a digital asset stockpile. Bitmine Immersion Tech holds modest BTC and massive ETH, exemplifying the shift toward active, yield-oriented treasury management. So which is winning in 2025? It depends on your goals. If you prioritize capital security, trust, and simplicity, Bitcoin still dominates. If you seek income generation, flexibility, and integration into decentralized finance, Ether is gaining a lot of momentum. In short, BTC leads in total reserves today, but ETH is catching up fast, especially for entities that want their treasury to work actively, not just sit idle. To sum up, Bitcoin remains the gold standard in corporate treasuries, safe, trusted, widely held. Ether brings yield, utility, and the flexibility of DeFi, making it appealing for more active treasuries. The smartest strategy may be a hybrid approach, combining both assets to balance security and growth potential. If I were advising a Treasury team in 2025, I'd lean toward a diversified model. Anchor with BTC, but allocate enough ETH to generate yield and participate in the crypto economy. That's it for today's Market Fetch update. All news sources are linked below, so you can verify yourself. Thanks for watching. If you enjoyed this breakdown, please like, subscribe, and hit that notification bell so you don't miss our next crypto deep dive. Drop your thoughts in the comments. Do you prefer BTC or ETH for Treasuries? See you next time.